In this session, I'm trading on the account using the platform Quotex. This is strictly for educational purposes so you can understand how price movement works and how decisions are made during a live market situation. As you can see on the screen, we are looking at a candlestick chart. Each candle represents price action within a specific time frame. The green candles indicate bullish movement, while the red candles show bearish pressure. Right now, I'm focusing on identifying short-term momentum. Instead of randomly entering trades, I'm watching how the market reacts at key levels. Notice how price previously moved downward and then started to show rejection, forming stronger bullish candles. This kind of behavior often signals a possible reversal or at least a temporary pullback. Before entering any position, it's important to observe structure. I'm paying attention to higher lows forming on the chart. This tells me buyers may be gaining strength. However, confirmation is always important. Jumping in too early can easily lead to losses. Now watch closely. Price is approaching a recent resistance zone. If momentum continues and candles close strongly above this area, that increases the probability of continuation. But if we see rejection wicks or sudden bearish candles, that may indicate weakness. Risk management is key here. No matter how confident a setup looks, I never risk too much on a single trade. Even the best strategies experience losing trades. Consistency comes from discipline, not from chasing quick profits. At this moment, I'm waiting for a cleaner entry. Patience is one of the most underrated skills in trading. Many beginners lose money because they feel the need to always be in a trade. In reality, the best traders spend most of their time simply observing. There, notice the stronger bullish push. This shows increasing buying pressure. Combined with the earlier higher-low structure, this creates a reasonable scenario for a short-term upward move. Based on this, I'm entering the position. Once in a trade, emotional control becomes crucial. Avoid reacting to every small tick. Markets naturally fluctuate. The goal is to follow the original logic behind the entry unless market conditions clearly change. And as price continues moving, we monitor behavior rather than guessing. Whether this trade wins or loses is less important than following a structured approach. Good trading is about executing a process repeatedly with discipline. That's the mindset that separates gambling from strategy. Thanks for watching, and remember, practice, patience, and proper risk control are the foundation of long-term survival in trading.